actionable, investable, and honest. I'm Greg Greenberg, and this is Buy This, Sell That. Let's make it profitable. Bob Zanuzzi, one stock that you like is Halliburton. Halliburton's had a fantastic summer, up almost 20%. Can they keep it up through the rest of the year?
We believe they can. We purchased the stock about 2 months ago. It was down 50% from its 2011 highs. Earnings were $5.22 today. They're $3.86 from a year ago. We believe some of the problems they've had are behind them. Natural gas prices are beginning to rise. When we bought the stock, valuations were at a trough on several measures: PE, price to book, EV to EBITDA. So we got at a very low valuation. At the peak in 2009, natural gas rigs were 1,200 rigs outstanding in operation. Today they're only 600, so gas prices are going to begin to rebound. Other catalysts are that guar pricing. It's an additive, comes from the guar plant that goes into fracking, and those prices have come down as well, as that crop has been much better this year than last. And then lastly, the Macondo oil rig that caught fire 2 years in the Gulf of Mexico, we believe they'll be indemnified by BP, and therefore that's behind them as well. So a lot of negatives were priced into the stock. Good valuation. Gas prices are turning up. Should help the stock going forward.
You're also bullish on Cisco. Now, this stock hasn't had that great a summer. They missed Wall Street estimates back in May, and they've been punished ever since. You're bullish on the stock. What's it going to take to turn it around?
Yeah, we're long-term value investors, and we purchased this stock about 15 months ago at around close to the pricing of where the stock is today. There was a lot of negative sentiment around the switches and router business, a lot of competition for Cisco. Public spending for their products had come down, margins were under pressure, and management, frankly, their credibility was in question. Valuation, when we bought the stock, and today it's very similar: 8 times PE, 1.9 times price to sales, 5 times enterprise value to EBITDA. They have $44 billion of cash in the balance sheet, with about 50% of their market cap. They have a 12% free cash flow yield, and they initiated a dividend about a year ago, only 1.6%, but we look for formidable dividend growth. We think management has a restructuring plan in place. Valuation's great, and expectations are very low.
A third stock that you are quite positive on is Lexington Properties Trust. Now, this is a REIT. REITs have had an awfully strong last 12 months. What do you like in particular about Lexington?
Well, Lexington is a $1.4 billion market cap company. They own single-tenant, triple-net lease properties in office, industrial, retail. Generally, the tenant in a triple-net lease structure will pay the operating expenses. They have 97% occupancy. They have higher debt than their peers, and I think this is the opportunity. They are selling low cap rate, meaning low-yielding properties, and buying higher-yielding, so creating a very positive spread over their cost of capital. That's very important for REITs to add franchise value over time. They're also doing some development around 9 to 10% yield. So the yields that they're buying and developing are much higher than their cost of capital. And we believe that Will Eglin, the CEO, is turned this company around. They just raised the dividend 10%, and we see high single-digit, low double-digit kind of dividend growth going forward. Those are 3 stocks that you like. Now, is there a stock or a sector you would sell at this juncture? I would absolutely not be buying or holding utilities, selling them gradually as they go higher. Utilities are at a 55-year high on a relative PE basis to the market. Investors are chasing yield and only yield. They have very little dividend growth, and over time, yield does not win, but yield plus growth wins, and dividends for utilities are not a growth vehicle.
This market has fewer players.
We're coming into a Monday where we're going
to enter a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.